So the question here is, how much interest does a $10,000 note earning 6% annually generate in 1 year? So the calculation here is pretty straightforward. You have $10,000 as your principal, 6% as an annual interest rate, and 1 year as your time frame. So this is a simple calculation since your annual rate matches up nicely with your 1 year term. So we go straight through and calculate that. Make sure you try it on your calculator. 6% is inputted at 0.06 into your calculator. So we get amount of simple interest of $600 in 1 year under these conditions. Now we get into something slightly more complex, which is how much would the same note generate in 1 quarter? But we still have the 10,000 as our principal amount. We have 6% as our annual interest rate, and we have 3/12 as our time period. There are a couple ways you can think of the time period. As the name suggests, 1 quarter is 1/4 of 1 year. We can also think of this in terms of months, where 3 months out of 12 are in 1 quarter out of the full year. This of course shrinks down to 1/4 also. So once again, simple calculation. Make sure you can do it on your calculator. But as we expect, we'll get an answer, which is 1/4 of our 600 answer. Note that we have to use a prorated time period to get an accurate answer. 1/4 is 3 months out of 12 in a year, as I mentioned, which is what the interest rate is based on. So we multiply by 3/12. Finally, let's try the same note, but with the prorated time period being 40 days. So this is a little bit of a game changer. We still have the 10,000 out front, the 6% rate, and then 40/365. So in the last question, when we had 3/12, we were splitting the year into 12 different parts, and we were using 3 of those parts. When we have days, we must split the year into 365 parts, because there are 365 days in a year, and we use 40 of those parts. So when you plug all this into your calculator, you should get, rounding to the nearest cent, as you should always do with money, $65.75. In this scenario, we must prorate using the number of days in a year, which, as I mentioned, are 365. Accounting for notes receivable. The first entry, 20 note receivable, is when the payee received the note and lends out the money. Let's assume that on June 30th, 2019, SFU Bookstore lends out $10,000 to Joe at 6% for 1 year. This is what the journal entry looks like. So I'll pause here for about 45 seconds and let you take the first crack at this journal entry. We'll continue in the same video. So debit will be a note receivable. And to be a little more specific, I'm going to add Joe to that account. $10,000 debit, which is the value of the note. And of course, to get Joe to sign the note, we must give him some cash. Assuming the interest is due at maturity, here's the journal entry for Joe's debt repayment. So perhaps we should add years to this so we can differentiate between when the note is issued and when the cash is collected. So 1 year later, on June 30th, 2020, the note matures and we get some cash from Joe. So it's not too tricky here because we've already done the math earlier in this set of notes. We'll go ahead and fill in the credit, the note receivable. That's going to be 10,000. We're also going to receive some interest. And that is, of course, put into the interest revenue account. And that will be 600. 1 year at 6% on a note of 10,000. Therefore, the total cash coming into us will be a debit of 10,600. Note receivables are also handy in a couple other situations. Imagine the bookstore performed a laptop repair for Lori, but agreed to accept a note receivable instead of cash. Here is the journal entry. So maybe I'll give you a short break here again, and so you can try this. We'll continue in the same video. So your debit is the note receivable for Lori. We were nice to her, and we decided to do some work without collecting cash right away. And we'll say the value of this repair was $200. I'm going to write a description here just for fun, because this is a kind of an interesting journal entry. Note receivable earned. Just not all being nice. We do earn some interest on this. 1 year at 8%. Just as an example. So you wouldn't get cash right away, you would get your customer to sign a note receivable. But at the same time, when they do pay, you'll get an extra $16 out of it in this case, because you're earning interest at 8%. The entry to record Lori's payment 1 year later would be just like Joe's above, with the repayment of $200 principal and $16 interest. So just like you saw up here, the numbers would be different, but the journal entry would be the same account. Finally, notes can be used to replace accounts receivable balances which are not paid on time or have other issues. If Claire has an outstanding AR balance of $150 but can't pay right now, the bookstore might agree to replace the AR balance with a note receivable due in 6 months. Here is the journal entry for this transaction. So you're replacing one asset for the other. So Claire has not been able to pay us, so we'll get her to sign something more formal, a contract basically, note receivable. We'll label it again. And the asset that goes away is accounts receivable. And I'll put down Claire again to make it really clear. It's for the same person. So you can write down a description here if you like. It's kind of interesting. I would personally put down something like replaced Claire's AR with a note. Note that Claire would not pay interest of $10.50, which is 150 times 7% on this note, but rather $5.25. 150 times 7% times 6 over 12. Because Claire agrees to sign a note that's due in 6 months and not 1 year, we only earn half the interest that's stated on the note. Right? So it's a 7% annual rate, but we only have Claire on the hook for interest for 6 out of 12 months. And hopefully by that point, Claire can pay $150 owed to us plus $5.25 in interest. As you might expect, there's a method for accruing interest on notes receivable for the purposes of accurate financial reporting. Let's use Joe's note as an example. On December 31st, 2019, the bookstore must update its records for year-end reporting. Here's how the interest accrual is recorded. So I'm going to stop this video here. Have a look at this journal entry and a couple follow-up ones, and we'll continue in the next video.